In the third quarter, we saw 2.6% revenue growth at constant currency, 3.4% in rupee terms. We also saw expansion of our margin to 26.7%, which is a 60 basis point improvement compared to Q2. We achieved this on the basis of very, very good volume growth. We saw volume growth of 4.2%, which is the best growth of any quarter in the last 3 years, and the best growth of any Q3 over the last 6 years. And we also had very high utilization. We touched 82.7% utilization in the quarter, which is the highest utilization in 11 years. We are extremely excited about these results. We also saw drop in attrition in absolute terms. In Q3, we saw attrition of approximately 8,900 people compared to 10,100 or so in Q2 and 10,600 in Q1. So we are seeing continued drop in attrition, which we continue to monitor and continue to be excited about as we look to the future. And as a result of this achievement, we are announcing a 100% variable bonus payout for our units in the company. So with that, we would like to open it up to some questions.
Hello, gentlemen. This is Rukmini Rao from Bloomberg TV India. Congratulations on the numbers. Of course, not quite what the street was expecting, and we are also surprised with the numbers, though. Just wanted to understand from you, Vishal, on what the demand environment is looking for you guys in the next quarter or so, because all of them were expecting a dip in the guidance that you might announce, and also just wanted to understand the way the rupee has been reacting. What do you see, the impact of this volatility of rupee going forward? Thank you.
I don't want to, as you have seen a tremendous currency fluctuation recently, and it leads to, in many cases, negative results and so forth. I don't want to get into the currency fluctuation business. We are in the technology and innovation and services business. We'll leave the currency speculation to others. From a demand perspective, we continue to see good demand. There is, of course, there are challenges in many industries, in retail and manufacturing. However, my sense is that there is a tremendous need for innovation. Most industries are in a tremendous state of disruption. They need software and a strategy to power themselves with software, to invent their future with software and with computing technologies. And we continue to see significant need for industries to renovate themselves with the use of innovation. Praveen, do you want to add something on the demand side?
Yeah, I think if you look at it from a geography perspective, we are seeing good demand in North America, barring few verticals. Europe is a bit muted. And if you look at it from a verticals perspective, financial services, we are seeing good traction, more traction in Europe than in Americas. If you look at manufacturing, we are seeing, as a sector, we are seeing fairly muted growth and pipeline. But if you look at it from a subsector perspective, we are seeing decent traction in high tech and auto, whereas industrial and aero is under pressure. RCL continues to be a bit of a challenge. We continue to expect volatility going into the next quarter as well, because that's one area where we are seeing significant transformation of the business model. So we'll continue to see wins, we'll continue to see postponements, and there'll continue to be some volatility there. Energy is under tremendous pressure. We are seeing, because of the drop in oil prices, we are seeing massive pricing pressure. We are seeing postponements and so on. So that sector, I think, for the next 2 quarters will be a bit troubled. Telecom, I think, given the M&A activities happening and the pressure on the top line itself, we'll continue to expect some challenges going forward. Life sciences, we have had a fantastic quarter this quarter, a very strong quarter. Next quarter, again, pipeline is decent, but remains to be seen. So overall, I think the momentum is good, particularly in Americas getting into the next this quarter and the next year. Europe is a little bit muted.
And I think it is important to keep in mind that the demand pressure that we see is on the way the services and the way the offerings have been so far. And that is, when we look at the innovation and the needs for tomorrow, there continues to be a tremendous demand for that. However, we do see pricing pressure on what I can perhaps informally refer to as yesterday's services, that we continue to have pressure on those because of the economics, because of the pressure that the businesses themselves are in, as Praveen mentioned, in retail and energy and other sectors. However, in every industry, there is a tremendous need for innovation. By the way, I also wanted to mention that because of the innovation that we see, especially from startups, and one of the things that I have been amazed by is that in India, we have a thriving startup scene, but also a challenge that startup companies see to scale themselves up to serve international needs. So one of the things that I'm very excited about is our board has today approved expanding our startup fund from $100 million to $500 million, and we will dedicate part of that just to investing in India.
Hi, Chandra here from ET Now. Vishal, looks like the new year has started on a good note for you. I was just going to ask about this startup, the innovation fund allocation. So this $500 million, is it part of the cash allocation strategy that you said that you will be talking about? Will there be more such initiatives that we can expect in April? Because there's a lot of questions on what you're planning to do with the $5.4 billion. If you can, tell us about the cash usage strategy. Rajiv, if you can clarify if the guidance 7 to 9% is in constant currency, because it says it's at September 30 exchange rates. And finally, Praveen, attrition, it is still 20.4 on an LTM basis. So it's not really come down for you. Why aren't the initiatives paying off? Because you guys have changed the compensation structure. I hear you're handing out iPhones to top performers. Why is there no let up in the attrition? Thank you so much.
My goodness. What was the first question?
It was about the fund.
It was around the startup
cash
fund.
usage.
Yes, you should expect that as we lay out our detailed allocations in April on what the implications of our strategy are and a detailed plan as a result of that, we will address the cash aspects of that as well. And yes, indeed, this 500 million is a part of that. But for now, one step at a time. And so today we are announcing a $500 million fund. And it will take time, of course, to draw down from this fund. But we are announcing this fund today that will start to invest in companies from around the world, but in the rest of the world as well. But we also want to have a dedicated focus, especially on Indian startup companies. But more to come in the next quarter. We need the additional 3 months to put together the details of how we will work out all of these things. And then in terms of the guidance, I'll let Rajiv address that. I think given the massive fluctuations that we have seen all around the world, and I mean, we are an Indian company. Our reporting currency is rupees. So I think at the end of the day, we have to measure ourselves by how we do in rupee terms, and revenue and profitability growth in rupee terms. And we don't want to get into this business of speculating on currencies and so forth. So what we have done is we are sticking to our plan. We are sticking to our guidance that we gave in the end of September, that the 7 to 9% that we mentioned as of the 30th of September, this is what we are holding ourselves to. Rajiv, you want to add something to this?
No, as Vishal already said, most of the global currencies have seen a huge depreciation in the last 3 months against US dollar. And if you look at Australian dollar, it's depreciated by about 7.5%, GBP and Euro by more than 5%. And that kind of currency fluctuation is very difficult to predict. Even if you look at it in the last 1 week, we have seen quite a lot of depreciation in some of these currencies. I think Australian dollar is depreciated by about 2% in the last 1 week itself. So given that, we are saying we cannot take a call on how the currency would move in the next 3 months. We gave a guidance of 7 to 9% as of October 11th based on September 30th exchange rate. And we are sticking to that guidance based on the numbers that we see today.
On the attrition front, I think from a LTM basis, it has marginally increased from 20.1 to 20.4. But from an absolute headcount perspective, we have seen 12% reduction in attrition as compared to Q2. And Q2 number itself was 5% lower than Q1. So from that perspective, we believe that it's trending in the right direction. And I have consistently maintained in the last quarter as well that it will take a few quarters for things to stabilize. And what we are watching out is the trend, and we are also continue to focus on employee engagement, employee outreach programs. So we'll continue to do that. But it will take a time, and it will take a few more quarters. It's a very competitive market. There is a lot of demand for hard skills, and particularly with Infosys, with its training programs and other things, it's I think the employees in Infosys have a pretty big demand in the market, particularly people who have been trained and so on. So there are various reasons for it, but we believe that many of the efforts we have taken have started yielding dividends, and it will probably take a few more quarters for it to come back to where we believe it should be.
I'll just like to add here, if you look at the absolute number, when you're saying the initiatives that we have taken are not paying off, the attrition in absolute terms for IL alone has fallen from 7,400 odd people to 6,000 people in 2 quarters. So attrition is down. On an annualized basis, the attrition is down from 21.1% last quarter to 18.1% this quarter. There's a 3% drop in attrition in this quarter. So the initiatives that we have taken are paying off. We are in the right direction, but as Praveen said, we still have a way to go. Yeah. We would like the attrition to be about 12 to 13%, so we still have some way to go. But I think the initiatives we have taken are started paying off, but it's too early in this stage to talk about where it will be.
Hi, this is Purnima from CNBC TV 18. Could you elaborate on the deal pipeline going forward? And also, you've had tie-ups with training centers to improve the sales team efficiency, if you can elaborate on that. And my last question to you is, Dr. Sikka, in the analysts call last time, you did say that you will give quantitative targets for December quarter. If you can also elaborate on that. Thank you.
In terms of the pipeline is very robust, as Praveen already mentioned that. Perhaps Praveen can add more color to that. What was your second question?
You're focusing on the sales team efficiency and having tie-ups with training centers. If you can elaborate on that.
We have been working heavily on that, on renewing our education and the way that we train. Of course, we have had a tremendous emphasis on education all along. We are a very distinguished learning company that values learning as a core capability for life. So we have been redoubling on that over the last quarter. One of the initiatives that we have taken is to train our salespeople using a very customized program from Stanford University's Graduate School of Business. And this is a very nice program that we are putting together. It will go into effect in March of this year. That will cover our top management, senior management, especially in the sales side. We are very excited about that. We are also preparing an online curriculum, also with Stanford's both School of Business and Engineering, to cover everyone at Infosys. And one of the things that we did in Q3 that we are very proud of is roll out design thinking massively across the company. More than 9,000 people in Infosys have already been trained on design thinking. We did intensive programs covering more than 2 days each with the top 400 managers of Infosys. So we are embracing design thinking. I expect that over the next few quarters, everyone at Infosys will be touched by this thing. And I believe it is fundamentally important for our future, because I think that as we look into uncharted territories and helping our clients innovate on their new frontiers, new technologies, new ways of thinking like design thinking are necessary, as well as to get us out of this mindset of doing repetitive autonomous tasks and focusing on creativity and imagination on a massive scale.
And my last question was, during the analysts call last time, you did say that you will give quantitative targets in the December quarter.
April.
Our statement has constantly been that because we have been working on understanding the details of our strategy of renewing and new things in parallel, that in April we will provide more specific, more tangible guidance, in particular on capital allocation and things like this. Praveen, you want to add anything?
Nothing.
Hi, this is Tarak from Z Media. How is the billing status going forward, and is the company planning to revise the billing rates?
Billing rates.
Pricing. Pricing.
Pricing.
Okay. Pricing is stable. Obviously, I mean, it depends on sector, but by and large, it's stable. On a deal-specific basis, anyway, it's as Vishal calls terms, old generation services. Obviously, there's a lot of pricing pressure. You have to go aggressive to win. But other than that, I think it is fairly stable. Only recent development is in the energy sector. We are seeing a lot of pressure because of the drop in oil prices. Otherwise, by and large, it's stable. Thank you.
Sorry, just one follow-up question on the volume growth. It's the best volume growth in 3 years, according to what you've said. How sustainable is this? And, were there any factors that helped you this particular quarter? I mean, because it's a seasonally weak quarter, yet you posted robust volume. So is that sustainable going forward? If you can give me some perspective on that.
Well, it was due to great performance that we saw this, and our hope is, and certainly our expectation is, that we'll continue to have great performance going forward.
Vishal, also wanted to understand from you on the startup initiative. You were looking at a lot of them. Is there anything in the offing that we can see in terms of acquisition or any significant tie-up and these startups doing work for Infosys going forward?
Yes, for sure. There's nothing that I can announce right now. I guess we can say we had announced a partnership with DreamWorks Animation earlier, and we are in the final stages of final discussions with them to invest in a joint venture that will help bring DreamWorks technologies to other industries like retail and manufacturing of digital manufacturing of physical goods. So we are very excited about that. But please stay tuned for that over the next couple of weeks, and you'll see more on both these fronts.
Purnima from CNBC. Utilization is at an all-time high. How better can utilization get going forward? And also, how's the U.S. growth? Because North America has grown significantly this quarter.
I think utilization, we have been targeting about 80 to 82%. Historically, we have been looking at about 78%. But this year, we started targeting about 80 to 82%. And that's where we are comfortable with at this stage. So we expect to sustain it at this level. There may be some quarterly aberrations because next quarter we will have a massive influx of trainees coming from Mysore. So you could potentially find some drop in utilization. But overall, this year we are targeting on an average 80 to 82%.
Thank you very much.
Thank you.